I'm not going to talk about the XRP crash anymore. If you watched my videos yesterday, I said that I thought it was likely that XRP, Bitcoin, and a few other cryptocurrencies would crash in the short term. That's why I said I was still very bullish on XRP and Bitcoin in the long term, but I do think prices will drop after these big jumps. Having said that, yes, that is exactly what we are seeing. In today's video, I'm going to talk about more because I have more information and more value to give you based on my experience in these markets. Make sure you keep listening and remember that nothing I say is meant to be taken as financial advice. Now let's watch that movie. When investing in the stock market, real estate, cryptocurrency, or anything else, I've learned that I should be bearish when most people are bullish and bullish when most people are bearish. There are many reasons for this, and I'll go over them all in today's video. I'm sure you'll understand what I'm saying, and you'll also be better off on your trip. That being said, I said in one of my videos yesterday that I think there will probably be a fix. This is because the fear and greed measures show that there was a lot of greed everywhere you looked, in the stock market, in the crypto market, in other places. There was even too much greed on top of that. When we reach that level and the stochastic RSI daily technical indicators show that we're overbought, the next few days are likely to be red. Why does this happen? Because banks and big investors are looking at these charts and realizing that a lot less volume on the downside is needed to make a big difference in the price than buying in, because everyone is already buying it. In the short term, the assets we're looking at are probably worth a little more than they're worth. This could be Bitcoin, XRP, or anything else. They're selling for more than they're worth. To get more price action, people are running out of money to keep buying things, which will make it harder. There were a lot of exciting news stories happening right after each other, which made people afraid of missing out. FOMO, for example, President Trump was traveling the world and signing trade deals with China and other countries. That's great. Those were exactly the things that the markets wanted. People started to buy because they thought, okay, let's go to the races again. Things are more likely to happen. We don't have these huge taxes on China. We should be happy because this is exactly what we want to happen. The markets have now reached their short-term or temporary peak. And I have to say, I thought it was not to brag, but I've seen this happen a lot of times before and know what to do when it does. That being said, there are still a lot of positive news stories going around, but the big players who are making money off of these moves and using the strategies I'm talking about are the ones who have been adding to the conversation. When people like BlackRock start to get bullish, that's when the real action starts. This is what you should be worried about, because these are the people who are making the money. It's not Donald Trump who is, making the money in the markets trading here. He's the leader. I thought he was busy closing. Trade deals with other countries are good for business. BlackRock means loyalty. It's black and white. They're making money. So when they say something good, say something bad. Now let me talk about the news. We'll go to BlackRock and talk about all of that. Then we'll talk about Bitcoin XRP. I think some big changes are about to happen there. First, President Trump is still being completely honest when he says that India has offered not to charge any duties on U.S. goods. It's still unclear whether he'll agree to this, and he also says that his trip to the Middle East could lead to investments worth $10 trillion, 0 cents. Full-on bull mode, zero. The stock market is crazy. Some people are so excited that they think Bitcoin will go to $200,000, 0 cents per coin in 2 days. It might not happen in the next 2 days, but I really think it will happen during this bull run. Now, for the important part, this is Larry Fink, CEO of BlackRock. He says the whole financial system is strong. Another interesting fact is that BlackRock CEO Larry Fink has been doing a lot of interviews lately where he talks about how optimistic he is about cryptocurrency, the U.S. economy, stocks, the tech sector, and everything else. He says that the U.S. economy is strong, inflation is going down, we're making great progress, and things look absolutely so cool. I'd like to draw your attention to one statement in particular. The top is close, and this is especially true when BlackRock talks about going up after a big rally. What I know about the top is that the neighborhood top is close by. which means that the 2E top is here, not at the start of the bull run. Okay, you guys in the chat are being silly, but yes, interest rates or something. I know we haven't reached the top of this bull run yet, but I think the area top here in a few weeks is most likely here. But anything is possible in this situation. More than one measure of inflation came in lower than expected, and now the US core PPI is 2.4% lower than expected. We're beating all of them. People might think that interest rates are going down, but the markets are adjusting right now thanks to the work of companies like BlackRock. We're also watching to see if rates change. The yield on a 30-year note is back to 5%. Instead of paying attention to what the big hedge funds and other investment firms say, you should look at what they actually do. For example, if the CEO of Bank of America says, I think the economy is great right now, you should look at what the bank actually does. What they really mean is something else. What's even stranger is that banks aren't giving out mortgages nearly as much. They're not lending as much money as they used to because people are probably not paying it back. That's why banks raise rates. Because of this, they've become very picky about who they lend money to. And that's where we are now. That's the truth. Rates are going down at the Fed, but not at the banks. The yield on the 30-year note is now 5%, and home loan rates are back above 7%. 7% is a very high number when you think about how big the Fed is. Even news about trade deals and lower inflation numbers can't make rates go down. News about trade deals can no longer keep yields down, and Powell still thinks they will stay. Rates have been high for a while, which must worry Trump and Besant a great deal. What are they going to do? That's the question. What I mean is that Trump really wants the Fed to cut rates. He knows they need to act quickly because the U.S. can't pay its bills right now. But you know what, Trump? Paul doesn't care, so don't bother him.